For our first afternoon session, I want to introduce Elevate NP. And so I brought them in because we've had a lot of emphasis on things like grant writing and so forth in the past 2 years. But really what a lot of people are held back on is the budgeting process and the financial management piece, and just really figuring out how do you manage that section on restricted funds versus unrestricted funds. What does all of that mean? And so they're kind of held back because when they're asked to submit a grant application, they aren't really able to put together what the grantor is offering, or is asking for rather. And likewise, a lot of folks who are filing like a long form 1023 to become a 501c3 that brings in over $50,000 a year really struggle to put together that 3-year projection of financials in line item form. So I feel like a lot of folks really don't have access to bookkeeping and accounting services in the nonprofit space because it is very different from other types of bookkeeping and accounting. A lot of folks will go to a small business accountant, or they'll go to the person who does their taxes every year, and that is just not the same skill set as somebody who comes from nonprofit world, but also local government world. I would say it's more similar to government budgeting in the sense that, for my local electeds in the audience, in the sense that you have, sewer fund and payroll and all that sort of thing. You have to have fund accounting principles in place and not just have everything come in and out of just one big general fund. So that's important to be able to track where your dollars go. It's also really important for knowing if you're spending your time and your money on things that are even worth it. So are you spending more money to hold an event than you even bring in at the event? Maybe you are, but you decide that that's worth it because you use it as a friend raiser rather than a fundraiser. But if you don't know what your numbers are, it's really hard to make evidence-based decisions. So I'm going to introduce John Hoffman and Stewart Urist to really walk us through, and I want to thank Elevate for sending you on over today. Thank you so much.
Thanks so much for having us. As Representative Salisbury said, I'm John Hoffman. I'm the director of Elevate NP. We are a new initiative around southwestern Pennsylvania to help nonprofits connect to a wide range of resources to help build their capacity, especially whether that's training opportunities, technical assistance, consultant partners, really across the gamut, across a wide range of topics. We want to help be some connective tissue to link you to resources that will help you be more effective and efficient in your missions. So my colleague Stewart and I are here today to talk about one of our topic areas. One of our main services, and I'll close with a little bit of what else Elevate offers, is helping to assess what organizations need and help connect to those other services. We're doing some work around fundraising, around talent, around governance, around adapting strategy and strategic change. But a core of what we're here to address is financial management of nonprofits. We know this is both a long-term issue in this industry, but it also has some urgency right now of if you can't manage your funds in a very tough environment, it's going to be hard to be successful. I am not a finance professional, though. My colleague Stewart will be the one who can field a lot of those details. I'm a social worker by training. I've spent most of my career around human services. Stewart, you want to?
I'll do mine.
Okay. So before we get into the content, because financial management is a really big topic, we want to get some feedback from you all to help us shape what we share today, and also just queue up and guide to answering the questions you actually have. So if you have a phone that can go to a QR code, scan the QR code that's on the screen, or go to www.menti.com and put in that code. This is a tool that helps us just get audience feedback and participation. So we'll give a second for people to log in. I see the number in the bottom corner shooting up. While folks are logging in, do you want to just do a quick?
Sure. Hey everybody, I'm Stewart, Urist. I am Program Director at Shared Financial Services, which is one of the first pilots within Elevate NP. If we're talking about former lives, I am a reformed actor who found his way into finance and have worked at a number of different organizations doing that. And I'll talk about what Shared Financial Services does in this space. But to the point about using resources well, I think one of the things that you need to consider as leaders is what is the best use of your time? Generating resources for your organization or doing this type of nuts and bolts stuff, and you need to have knowledge and awareness. And we're going to try and help and support on some of those pieces today. But also, we saw a gap regionally. When it came to support for small and mid-sized nonprofits, and SFS is Elevate's attempt to meet some of that need, which is just so immense.
So if you are logged into that QR code, these are all anonymous questions, but just helps us get a sense of the room. The first question is, what is your mission or focus? We've got a couple options there: human services or housing, arts, culture, humanities, education, physical or mental health, community improvement, and other. So if you could take a second and just share what your mission or focus is. Got a good mix, it looks like. Great. So we'll try to use examples as we go that are relevant across different types of organizations. We also know that financial management looks really different at different sizes of organization and different points in the life cycle. So we'd love to just get big picture. How big is your organization by annual revenue? From the small end of less than $100,000 up to the big organizations of 5 million or more. Again, we've got a good mix coming in. A lot of our examples are going to be skewed a little bit more towards some of those fundamentals for smaller organizations, but hopefully there are still some good pointers for the larger, more established organizations in here. And we'll have lots of time for your questions at the end, so can tailor it to exactly what you're looking for. And so then we've got a couple of financial topics here. We'd love to know how confident you feel on the following topics. Just on kind of a slider from not at all confident to very confident. Day-to-day bookkeeping and reporting, budgeting and forecasting, tracking restricted funds or grants, auditing and required annual filings, and managing cash flow. Hopefully the presentation from the folks at BCO this morning helped answer some of what you need to do around compliance. We'll touch on a few things around 990 filings and other important steps and where to get help if you need it on those. So it looks like we've got a good kind of middle of the range in confidence across all topics, but some are very confident and some are just getting started. So that is helpful for us. So we're here to help answer some of the common financial management questions. As Representative Salisbury said, we've got a few things that we're really focused on, but we'll tailor it to some of that feedback and have time for questions at the end. So I'll hand it over to Stewart.
All right. Hey, everybody. Let me just scooch this over here, John, in case you want to sit. So as John said, we're going to start at kind of a basic level and leave some time for questions as well for, pieces of this that it might be resonant for folks, but, kind of want to give some tips as we go through here or some ways that, kind of we think about approaching this. So first of all, starting with budgeting. So why is it important to have a budget? A lot of us have budgets, right, in our households. I think many of our organizations, you're used to going through some sort of annual budgeting process with your board. But for younger organizations or organizations that are building these good financial habits, what is the point of putting all that time into it, right? So budgeting, it's a muscle. It's something that you build over time. You get better and better at it the more you do it. And it's better to do something than to do nothing, than to start building that. And, it's the exercise where we take a look at the resources that are likely to come in over the coming year and match it right to our programs and to our expenses. And, by sitting down and doing that, we understand how are we going to get to a kind of repeatable annual surplus. And, that's one of those, the idea that nonprofits can't have a surplus, or we always, we aren't allowed to profit at all. We want to have that repeatable annual surplus so that we have, some working capital, some ability to be flexible in the as new circumstances come up. And this is the way, that we plan to that. And it's the building block for how we report on to our progress over the year too, right? Once you have built that budget, you go through and look at everything on your chart of accounts. And, that is like all the different categories that exists in whatever system you have, where you can say, I have these types of revenue that come in, I have these types of expenses go out. And you set that target for each piece. Once you have done that, then you can load it into your accounting system, right? Your reporting becomes so much better because you can look, how did I perform, versus my budgeted plan for the year. That helps your board, who can be such key partners and advisors, but they are volunteers. They only have a little bit of time for us, every so often. It helps them understand, is this organization on track, off track? Where do I want to ask questions? Where do they need help? Where the finance as a way to make meaning and tell story about your operations. Getting that loaded into the system is really important. And as we know, many funders require a board-approved budget. You have to be able to have that multi-year picture. As we were talking about a second ago. So, it's a good process to begin building. So how do we go about it? And, what do we think about, as we're building the budget? Well, there's a couple ways to go about it. First of all, the idea of annual increase or zero-based budgeting. Annual increase, right, you look at your performance from the prior year, look at your actuals ideally rather than going budget to budget. This is a common pitfall that I've seen in organizations, right? But if you go budget to budget to budget, you're never actually thinking about how did that stuff turn out? The best information when you're building that budget is your prior year actuals, and ideally a couple years of actuals so you can see what's been happening over time. But so if you have that prior year information, right, you can budget an annual increase, percentage, on that previous line. Or, do you want to take a zero-based approach and, start all the way from zero and count up, okay, what do I need to, what is my staffing footprint going to be this year? Or what are all the expenses relating to the housing that I'm providing and building it up that way? And, you may use a mix of this, if you have a relatively consistent staff, right? You might know the percentage increases, that you hope to plan for them. But then if you have a new programming, a new aspect, you might start from that zero-based perspective. Like I said, go through every account in your chart of accounts, try and set that. You don't want to get lost in the detail such that it gets in the way of doing this exercise, right? Certainly in a larger organization, you might have departments, you might have separate budgets, by different slices of your organization. But, don't let great, be the enemy of good, right? It's better to sit down and set those targets. But you can do this, by pieces of your business and then roll it up into something larger that you get loaded in. Be conservative with your revenue. That's another common trap that people get into, right? We're very good at understanding what's it going to cost to do everything that we would like to do this year. And then we see, there's this big cap between the revenue and the expenses. So we're just going to raise $50,000 more this year. Okay, great. We'll just put that in foundations. We're done. We made a budget. That's how you have sad surprises partway through the year. That is your opportunity to come in and have those decisions and try and be really conservative, especially in this moment, right? When the funding picture, it's so much more challenging right now. You want to make those plans and decisions up front in your budgeting process rather than find your way into them later. And I would also say that a development goal and a budgeted number are not the same thing, right? You can have aggressive development goals and targets for your development team, but that doesn't mean that's what you write in your budget. You want as many of those surprises as possible to be upside surprises, things that let you do more things But, and you want to minimize the opportunity for, kind of bad surprises. And then allowing for some contingency. There's a couple different ways to approach this. You can build it into the individual lines of your budget to give you some flexibility in those areas. You can have a miscellaneous or a contingency kind of line down at the bottom. But I would say, between 5% and 10% of your operating expenses, depending on, how unpredictable your operations are right now, that's going to give you some wiggle room, some flexibility for the unpredictable that, always happens in a year of, executing your mission. And if you plan for it there, you're drawing on it in a planned way. You say, we knew there'd be some variation rather than, again, finding your way into it in a more kind of crisis posture. This is an example of, kind of what it can look like in progress, you put it together, right? So this is looking very small on the slide, so I'll tell you what we're looking at. Up on the side, the left side, right? Just those are all the different charts of accounts, and some of them are collapsed. When you put this in front of a board, you're not going to maybe show them every piece of every place that you log revenue. You can show them families of it. And then the first column is giving me my actual numbers, for the year so far. This is an organization that's 3 months into its fiscal, and then the budget is next to it. And then because, I've loaded this into the system, right, and I can get it side by side, I can start to kind of connect those dots in my reporting to help lead my board or my advisors to where do we want to draw our attention, right? So the columns, I have in this particular presentation, right, I have a number of dollars that are remaining, in the revenue that's either telling me, how much do we have left until our goal there, where are my expenses, how much do I have left to spend, and then I give it expressed as a percentage. And up top, there's a gray box that says 25%, because that's how far through our fiscal year that we are. And that's kind of our reference figure, right? So we're a quarter of the way through the year, and then we have our percentages for all the other lines. And then naturally, that's going to lead, their board, whoever is helping advise you on this to, okay, well, we are only 7% of our way on earned revenue. Are we worried about this? Well, no, our big program happens, in the spring. So that's when we expect to see that revenue come in. But, we've expended 121% of our office expenses. Oh yeah, well, 2 of the laptops broke. So yes, that's a variance, and we're going to cover that, from the contingency. But it gives them, instead of just being at sea with here's some actuals on some paper, what am I supposed to tell you about this? It helps you calibrate and have, meaningful conversation around the numbers that allows them to be good advisors for you. I also leave a notes column on the side for these presentations sometimes, that way you can get ahead of some of the easy stuff like that and just give them some notes in line. You can comment on cells, there's a ton of ways to do this. Now, budgeting in this moment, right, which is unprecedented, right? We've been talking a lot about scenario planning at Elevate NP, and I'll show a little bit about some of that methodology, right? Scenario planning doesn't mean that you have to build 10 different budgets. Building one budget is quite enough for most people annually. But scenario planning, you need to look at those most likely possible futures and spend some time quantifying that, okay, if this happens, if we lose this major support, what will it mean? What actions will that trigger? And trying to quantify, what will the financial impact be? What would we do, in that case, that type of scenario? You could, if you think you're facing a lot of unpredictability, be more conservative, build more of that contingency in. And if you do have to have one of those major changes, right, you lose a major grant and you're no longer able to execute one of your major programs, or you have a reduction in force or something, heaven forbid. That is a situation where you might consider a mid-year reforecast, where you go back through and say, okay, after this major change, what do we think it's going to look like now? I think generally for a small and mid-sized organization, reforecasting is not the best way to spend your energy. There's other more meaningful discussion you can get through a year comparing versus your budget. But when you have a major shift like that, it could be helpful, again, for your communication, with your advisors who are helping you to say, here's what we expect now, given that we've gone through this major change. And so this QR code will take you to some of the free resources on scenario planning that are available on the Elevate NP website. So we've been working with the Bridgespan Group, which is a firm out of New York that does some of this work, and having some, we had an online session, and we're going to have some actual trainings in a few different counties. And this is just in brief, how they approach their methodology. And there's more online, but like I said, you're identifying those kind of key drivers, those key scenarios, then you're going to quantify. and model, and what would this mean in dollars and cents. And so then what you have is kind of a grid of like actions that you would take, and you determine the trigger points for like, we will do this, we will execute this scenario if this happens. And then as circumstances change, this is a continual process that you can go back through. We find that just having the methodology, like where do we even start with this, is helpful. So hopefully those resources, help people get started with that. But I think just like thinking through in advance helps so much in terms of just facing it in that moment of crisis and having to do all the planning and all the reaction all at once. Another area, as we were saying, that trips people up a lot is unrestricted and restricted support. And I think this is the place that bookkeepers and firms that aren't very used to working with nonprofits get themselves into the most trouble, because it is the area that makes us, the most unique from, kind of general businesses. So unrestricted funds, right? That's the dollars that you take in that you can use for any purpose. So unrestricted donations you get if you do ticket sales or have other revenue from your program's classes, typically that's unrestricted. Or a grant that you get that says it's unrestricted for operating support, the best kind of grant. You can use that for any purpose. Restricted funds, right, are the ones that come with rules. So a grant that says, it is for classes, this specific class, or it is for activities in this like future year. So it has a specific written purpose that comes along with it, and it becomes really important that you track, that you are expending those funds in line with the stated purpose. So tracking, right? There are many ways to do this in your system, but it's really important that you set it up, right? So you can use dimensions in QuickBooks or whatever your different accounting system is, but you want to have some way that you are attaching it both to the money when it comes in. So you can say like, this is a grant and it is for this restricted purpose. And then when you are creating the expenses, you want to attach that same kind of information to it so that you can run a report and say, here's all the money that I got for this purpose. Here's everything that I expended against it. And so, building it in a way that you're tracking it as it goes along, it prevents this kind of like fire drill or scramble, the reporting time where it's like, oh, like, how much staff time do we allocate to this? 15% of this person? Okay, and then you kind of make an adjustment on the reporting form. But ideally, you are set up so you can do it going through. It's also really important for your cash management. You don't necessarily need to keep your restricted funds in a separate account from your unrestricted funds, although some people do that as a safeguard to make sure they can't accidentally, go into the piggy bank there. But you definitely need to have an idea, like a clear idea of how much do I have in dollars that are unrestricted to meet my kind of current obligations and things that come up, and how much of this money is actually for a future restricted purpose. Organizations definitely get into a lot of trouble when they try and float themselves off these restricted funds, and then something changes and suddenly they can't get out of that, and then they have to talk to the funder or something, if that's even possible. It's a bad position to be in. So you want to have clear visibility on this and work with someone or set it up so you have visibility on this as you go through. So like I said, it's related to cash flow tracking. And like with budgeting, I would say cash flow is similarly tracking your cash management is a muscle that you build as well. It is something that you get better at over time, and the only way to get better at it is to do it. Within the SFS team, I lumped that together with the kind of advisory services that we'd have a fractional CFO, because it really requires the perspective and knowledge of a leader and someone who knows the whole organization and its activities really well, because you have to be able to look across it and understand when are the monies likely to go out. But it doesn't have to be a huge overcomplicated thing where you're putting out every single bill, every single expected gift. I'll show you in a model a second of how I think this can look. But basically, a simple Excel spreadsheet is a good place to start with this. And you just have whatever time period you need to work from on top. If you are very tight on cash, you might be tracking this kind of week by week. If you have some working capital, perhaps you're looking, month by month or in quarters or something. But you plot it out that way and just look at, what is my beginning bank balance? What's all my revenues coming in? What are my expected expenses going out? And then, so what do I expect that ending balance to be? And you just kind of build a habit of getting in there periodically and updating it and seeing, are we on track? It's going to highlight for you where those periods of risk are, like where those lumpy periods, where we need to be planning ahead to try and mitigate something we can see coming down the road instead of stumbling into it and a payroll bouncing or something like really unfortunate like that happening. So again, and I think maybe we can put these on like a hidden site or something, hidden link, but this is what okay, great, it'll be distributed. This is what it looks like, kind of in practice. So I have weeks across the top. I have the beginning balance there. I have, just families of revenue, right? So I have all my individual contributions there. I'm not separating out major gifts from like small gifts. Maybe you would do that because it's meaningful for how you're watching particular gifts. I have all my grants together there, but maybe you want to track your funders individually because like when they come in or there's different families of funding that you get reimbursement for on like a periodic basis. And then similarly, I have, expenses down at the bottom. Payroll is an important one to capture. You want to be able to have visibility on like what your payroll burn is over time. That's a really good thing to have visibility on. But I have rents, utilities. You can expand this or lump it up as much as makes sense when you're operating. It's, the process of going through it. And so looking at, this kind of like sample one that I put together, where my eye would be drawn is to that week of November 7th and November 14th, where I end up, with like $700 in the bank there. Like when you see a low cash point like that, that's a trigger for you to say, okay, like what mitigation, like what am I gonna do when I come up against that? If I have a line of credit with my bank, maybe I'll make a line of credit and I'll build that into my revenues and I'll plan to repay that at a certain point, on this cash flow spreadsheet. Maybe I will change my plan for accounts payable. Like if I have 30 days to pay those, I'll pay them later on and shift it so I don't ever get in the red zone on my bank account. Maybe I can talk to that funder. I have that $45,000 grant coming in on the 14th. Maybe they have some flexibility to, ACH that over to me a little bit earlier. So again, it's like, it's part of that radar room, right? It like lets you see what's coming down the road. And by plotting it out this way, you can see, where those risk zones are and be proactive about planning for them rather than approaching it from a place of crisis. I'm not going to spend a lot of time here on compliance in the BCO because we just had a great presentation on that, but just a reminder that most nonprofits have to file it, and that with that, you need to have your 990 completed, and there's financial statements that you need to have prepared in different types depending on your gross contributions, right? So some of you will be able to just present internal financials, but if you're having a compilation or a review or a full audit, right, you're going to work with an auditing firm probably to prepare that. And that's one of the types of outsourced support that you might seek as you go through your year. Typically, they can help you with your 990 preparation as well. Like with the BCO, the 990 has breakpoints that are related to your gross receipts in a year. So if you have under 50K in gross receipts, you can file what's called like the postcard 990. It's very straightforward, and you probably don't need outside assistance to do that. And then there's these other cutoffs, for a 990 EZ, which is a little more complicated. And then, finally, if you have receipts of over 200K or assets of over 500K, right, you're going to file that full 990. And this is, at that point, you're certainly having, a review or a compilation. I would strongly recommend at that point engaging with that auditing firm to prepare your 990 as well. You want to be working with someone who is a tax professional when you are sending a filing off to the federal government like that. And they're familiar with all the schedules, and they're going to be, good consultative partners in getting that through. And you will also probably learn things about how you would like to construct your budget next year in ways that align with the 990, but, that's the next piece of it. As I was saying kind of at the beginning, some of this stuff, depending on the size of your organization, is a good use or a necessary use of your time and skills. And sometimes it's appropriate to seek, outside support so that you could be focused on executing your mission, generating resources, doing the things that, you do best as leaders of your organizations. So we talked about auditing firms, right, and the types of things that they can do. A good auditing firm, they're doing that work of preparing the financials for you and helping you with your 990, but they also will have a consultative relationship for you throughout the year. That is how many organizations, list CPAs there, right? It's a credential, a certified public accountant. A lot of people get that kind of CPA level insight from their auditing firm, somebody who will pick up the call and say, hey, like I have this grant, can you look at this grant letter? I'm not sure how to book it. Is this restricted? Is this deferred revenue? They can advise on that. They would much rather help you up front, frankly, than catch it in the auditing process and have some sort of adjustment. So that's a piece that I would recommend. Accountants and bookkeepers, in terms of like outsource support, right? You can have these as part-time employees yourself or full-time employees, depending on your staff, but you can also seek them through some sort of accounting firm or fractional staffing firm. I'll show you in a second, how we kind of divide up those services. But, bookkeepers typically are folks that are concerned with just, getting the numbers into the computer and making sure that you're getting everything in there so you can have financial reports. Whereas accountant might be a little more experienced and could help you with things like, allocating different types of expenses to your grants to make sure that you are getting the maximum that you could on like a reimbursable situation and applying salaries properly. So it's like a higher level of savvy is like what I would say there. And then you may also contract for fundraising support, right? Folks that will go out and raise money or help to throw a fundraiser for you. And one thing we wanted to note here in this area of compliance is that fundraisers that are raising money on behalf of other organizations, not people that are on your staff, but they are to be registered with the BCO. So you want to make sure that they are credentialed properly to be working on behalf of your organization, so you don't have any trouble with that kind of stuff down the line. So like I said, Shared Financial Services is a program within Elevate NP, right? And we are focused on small and mid-sized nonprofits. Operating budgets of under $2.5 million, and we have services, utilizing those different types of fractional staff that I was kind of talking about to help provide this outsourced for organizations. And the advantages, that we believe like an outsourced relationship provides that you might consider, we are one provider in this space, but there's many firms that do this type of thing, and just generally, like it's about using your time well and about allowing you to have a few hours of access to a more skilled professional than perhaps you could afford to have full time on your staff. There's also advantages in terms of turnover, right? Like when you lose your bookkeeper and that bookkeeper's been there for 15 years and it's suddenly like, I don't know how to do my books anymore. When it exists, with an outsourced partner like that, they have documented procedures and stuff that hopefully they would be able, or they should be able to pass that off, within their company and give you like a relatively, seamless experience. Each firm does this a different way, but I'm showing this as an example of like how we kind of titrate our services, to like this kind of bookkeeping package, which is for smaller, unaudited organizations, really trying to keep the kind of monthly fee as low as possible, served primarily by like a finance associate, which is, that bookkeeper level type person, which is a little bit of oversight, and then a more robust version, basic finance, that has that accountant involved to like project manage and audit, do really tricky kind of grant reporting and allocations when you want, more of that higher level resource. And then, strategic finance being for like a fractional CFO. It's sometimes you just need that advisory, someone who can prepare financials to present to your board, advise you on budgeting and forecasting, but your day-to-day machine is very well in control. That's when you might consider like a fractional CFO type relationship. And then, we have full service relationships where we're doing really the entire outsourced operation for folks. So we want to leave lots of time for Q&A. I'm going to turn it over to John for just a few more resources that are available through Elevate NP, and then we'll take some questions.
So if you have questions, you can start making your way up to the microphone so we can take them. But we do have a bunch of free resources on a variety of topics. I understand today's presentation, along with the others, will be shared by Representative Salisbury's office. We have on our website a fundraising 101 video and resource series. We have that scenario planning, webinar recording, and toolkit that Stewart mentioned. We have an upcoming webinar on December 2nd around nonprofit mergers and collaborations, also with the Bridgespan Group. And then that assessment navigation service, we're going to be starting to roll out more by the end of the year. Starting really at kind of the mid-size organizations, so not the super small, but up to the couple $1 million size. Our colleague Kate Lee, if you want to raise your hand, Kate, is our program manager of that. So if you're interested in learning more about that, feel free to talk to one of us after today. This QR code points you to our website. So all of those materials that are free resources are available on there. but please, would love to answer any questions. Or Stewart would love to answer those questions as a finance professional.
Should we run a microphone? Or?
Yeah, I'll run. Why don't you use that one?
Hello, hello. All right, great.
Can a firm who does bookkeeping and basic finances also do the audit for the same organization?
Hang on. Hello. Okay. Yeah. I've seen auditing or like accounting firms that have arms that do both of those things. Usually, like to avoid conflicts of interest, they tend to house that in kind of like separate divisions. Is like what I've observed. So I think it does exist. You know, like our organization does just the kind of the accounting support and doesn't do auditing. But like I have some colleagues that I've checked with over at Schneider Downs downtown, and they have like a consultative arm. And of course, they're a very big accounting firm and auditor as well. So it's just about kind of the scale of the business and their ability to keep it no conflicts.
Thank you.
My question is, how do you,
Can you step up to the microphone a little bit so we'll be able to hear you in the recording? Thanks.
am I better now? Okay.
Yeah.
This has been a dilemma of mine. How do you manage budget when most of your money comes from reimbursements? So there's no budget on how much you can be reimbursed. You invoice based on the amount of people you serve and the amount of, so sometimes it could be 50,000, sometimes it could be 30 that's reimbursed, sometimes it's 100. So I've like been all over the place about that. So.
And I think like this is a good example of like why we put it in that, like kind of CFO realm of like it requires someone like you who at least has experience on like, being able to benchmark that. I mean, I think you have to set targets is what I would say. And I don't know about the specifics of, like the services that you're delivering, but I can't imagine approaching that without knowing, like I expect to serve about these many people. And this would be, the revenue that I would take in.
Would that be a good use for accrual accounting rather than cost basis?
You definitely have to be on an accrual basis for sure. Because then, right, you could, you prepare your budget in an accrual way. You could have that target, right, that you're going to take in. But I don't think that like solves it per se as much as just like in the same way that I would anticipate, taking in like, X amount of contributions, but I don't know that I'm actually going to be able to raise that money. I expect to serve this many people, which would then result in, this much in reimbursable, support. But then, and then you have metrics, I guess, to monitor, in terms of like if we're on track to serve that many, to see if we're on track or off track and need to adjust. But I would probably be like a key indicator that I'd be monitoring like pretty frequently as I go along to know like what I can expect and that I might be something I'm watching for that reforecasting.
So you're depending on the federal government to get money to the state, and then you're depending on the entity that's bringing in the state money to get the money to you, and then you find out that there is no money, but you still have work to do.
Yeah.
So you're working with nothing and just paying the people that work for you. That's a lot of what happened for us.
I think you have two big challenges. One is what's the demand, and the second is when are you actually going to get paid for it? The demand side, I think, is a little bit easier if you can have really good data on your program utilization and can track that over time so that you know if there are seasonal fluctuations, if you know if there's a long-term trend of growing demand or slowing demand in an area. But the other side of it, of when do you get paid, is where I think some of that cash flow management really becomes important. Of you do your budgeting based on what your demand might be, but really watching that cash flow. I know human service providers right now in Allegheny County are still getting paid by DHS. That's not true in every county. And so being able to kind of have eyes on that cash flow becomes really important.
So the other is, how do you know what category? Is it unrestricted funds or restricted funds? I've never.
That sounds like restricted funds to me because it's for a specific.
Sounds like restricted funds?
Yeah, it's because it's for a specific, like you're expending money for a specific purpose and then being reimbursed for that like fundable purpose. Like
So when you get to the end of that, when you get to the very end of it, and you get the one big, large check at the end, and that piece of program is over, is that you spent the money? So now is it money you can move into something else?
Well, at that point, yeah, you already expended other money to
Yes.
cover it, probably your unrestricted dollars. You're getting reimbursed for that. We just want to make sure that like those expenses line up with the money that like you're taking in. You're essentially backing into it like the other way. And often, you know, you have grants and you're spending them down. But this is, you know, you're replenishing your working capital or the cash that you had on hand to deliver this programming. Sorry, go ahead.
Oh, no, I was going to say this is a good example of the importance of having access to a line of credit for an organization. So a lot of small organizations, let's be very honest, the line of credit is the founder's credit card. So when we are looking at a situation that we have right now where you're not getting funds from the federal government in many cases and where there's no state budget at this time, you are kind of caught in a tight spot. So what ends up happening is the smallest organizations are typically the first to fold because they do not have access to any kind of line of credit. They don't have a credit history, anything beyond their founder's own personal credit history. And even though it shouldn't be that way, and I've often, spent years telling my clients not to get themselves in that position, realistically, no one's ever going to care about an organization more than the founder. And so you often have people who are in a situation where they've loaned the organization money, which you absolutely have to document. Don't get yourself in a situation where you have weird undocumented financial relationships with the organization that you're on a board of or that you work for or that you founded. And unfortunately, a lot of people absolutely do that. They sign up, they're personally accountable, personally responsible for contracts. They've signed that they're personally responsible for the mortgage on the organization's property. All kinds of things can happen. And you just want to avoid any of those types of situations. And I want to bring that up because I know we've done, raise your hand if you bring in under $1 million, raise your hand if you bring in under 500 and that kind of stuff in previous years. And I do know that the vast majority of the people who come to the symposium are under $250,000, if not under 100,000. So I want to address the very real aspect of the fact that people don't necessarily have access to a traditional bank line of credit. But that is one of the reasons why you want to be prepared. Like I started telling people, that there was going to be an issue like back in January, February to try to get ready. But so many people tell me that, my finances are in such disarray of my organization that I'm not eligible for a line of credit. So I either have to, people say I've raised $50,000 off my board members, but they can't give any more past that. And that's even a privileged place to be in for many organizations. So I just think it's really important to acknowledge that, not everybody has the opportunity to wait on reimbursements and that it may literally mean that you have to furlough people.
I think that what hurts the most is when you go to other foundations and you've done the work and then they start questioning your capacity or your governance. Can you really manage this little bit of money that they're giving you, but you've managed millions over the past 3 years? And I don't know how to break that cycle with foundations.
Last question.
Okay, so my question, you talked, that's loud. You talked a little bit about the budget and the importance of that. Can you dovetail that back into the importance of making sure that you're working with budget and financial planning when you're doing strategic planning and how that works with fundraising planning, just a little bit?
Are you an audience plant? This is good. Yeah, I mean, like when you're in your strategic planning process, right, often you will do a reduced version of your budgeting process over multiple years because I would say a strategic plan, without a financial plan that underpins it, is a lot of cases, hopes and dreams, and to try and quantify that. So, yes, like I would go through that annual budgeting process, and in my strategic plan, typically I have specific investments or programs or things that I plan to do. I would typically build out, a 3 or 5 year model for that, depending on what's going on, and try and quantify that roadmap as well. And it gives you, again, like the budget has milestones for you every month when you have closed financials. The strategic plan, if you have a financial plan that goes along with it, now you have annual kind of milestones to check in with as well about, am I on track in executing the strategic plan or not?
So prior to joining Elevate, I was a consultant and I did primarily strategic planning. If you are working with a consultant and they are not thinking about the financial implications of the strategies you're talking about, find a different consultant. I know we're at time. As we hand things off to the next presenter, if you're still logged into Menti, the last question is just about what future topics you're interested in. This sort of feedback is really helpful as we plan future programming. So whether it's as we're in kind of this break and transitioning, respond, or if you just keep it open on your phone and want to add some thoughts, we really welcome your feedback to help make sure that whatever we're putting together is actually resources that are helpful to you all. So thank you.
Thank you very much.